life insurance, I would say, is definitely needed just for the unexpected. Prematurely accidents happen every day. We all know we cannot live forever. So just a simple fact of having something in place to give you the peace of mind to know that your family will be taken care of if you were ever to leave this world. Especially because these are the people you love and care about, and you care what happens to them past your death. You don't want to be selfish enough to just let them figure it out. So I would say life insurance provides tax-free money to your loved ones when you pass away. It can help cover final arrangements or pay off a mortgage or other expenses. Some policies also build cash value, which you can use during your lifetime. So every policy, regardless if it's term life, whole life, is needed. Final expense is needed, regardless.
That's
I
great.
hope I
So
answered your question. Did I answer your question?
you did, you did. So let's talk a little bit about what you call the two different type of life insurance. There's term and there's whole life. So what is term life insurance and what is whole life insurance?
Okay, so term life, just how it sounds, is a term, which means it's a period of time. I like to explain to my clients that term life is compared to like you renting, like you have an apartment and you're renting, you don't own it, right? So as long as you're living in this apartment, you're going to continue to pay rent every month as long as you live there. So with term, you have the popular options are a 10-year term, 20-year term, and 30-year term. So just to put it in a practical scenario, say for example, you in your 30s, like myself. I'm in my 30s, I get a term life for 30 years, which is the max. Now, 30 years later, I'm 60 something years old. In my 60s, when I need it the most, when I'm looking to retire, the term period ends, right? So now you're no longer covered with life insurance. So therefore, you're looking for more insurance to cover you from 60 until the good Lord calls you home. Therefore, the price is going to increase. So anything dealing with term, once you reach the period of your term policy, the premium you've been paying for those certain amount of years is going to increase drastically, okay, with a term policy. And it's also some term policies to where you have a feature to where you can convert it to whole life, which we'll get in more into that too, later in this podcast. But so yeah, just to keep it simple, you can get a large lump sum of money for just a little bit of money. Okay, so for example, you can get 100,000 for $20, for $30. So just, don't quote me on the prices. However, it's just to give a picture in your mind that you can get a large lump sum just for a small amount of money with term life. Whole life, I like to explain, it's like you have, to the next step, and now you own your home. You was renting for years, and now, you want to take a different route. Now you own your policy. So with whole life, it has a component which is called cash value that earns at a compounded interest rate at a 4% or higher. Way more than what the banks are giving you today. I believe the banks are 0.02.01%. So however, this is the minimum interest you can earn on your money with whole life, 4%. Okay. And it doesn't start building cash value until after your second year, majority of the times. However, see, I get a little sidetracked. Whole life is is a permanent policy because I'm very passionate about this. But whole life is a permanent policy, which means once you jump into the policy, wherever you start, say for example, using the same example from the term, that $30, once you lock in with $30 for a whole life policy, it's going to be $30 from when you're 30 years old all the way up to you 100 years old. It's going to be $30. And after the second year, like I mentioned before, that's when you start gaining interest in your policy. And that's the money. It's like a savings account within your policy. You can borrow from your policy and there's no penalty, okay? It doesn't report on your credit report that you're taking money from your policy. It doesn't do none of those things, okay? So Yeah, so whole life is permanent. If you owning your policy, just like your home, when you pay your mortgage, you're earning equity in your home. In a whole life policy, you're building cash value, which is equity in your policy.
No, thank you. I like that. I never heard of the way you explained it in terms of apartments and buying a house. So I like the idea that you was able to like make it more relatable in that sense. I really do.
With
So being that said, um, I guess the next question would be how like what are some requirements? Because based on the like your age and your health, like a lot of different things plays a role in terms of the price. So how do you go about based on someone's age, health, like tell them which one is like they should go for?
Okay, and let me just back up a little bit. I like
No
to
problem.
also just clarify, just to dig in a little more with the term policy. So it's different type of term policies. Um, I've already went over the regular policy, right? But you also have a term policy to where it's a return of premium, which means, say for example, you get a 10-year, 20-year, 30-year policy. You pay your policy every month. You don't miss a payment. At the end of that term, you still with us, still living, you still with us, you get all of your money back. Okay, so that's a type of term policy as well, return of premium. You can get 100% of your money back, or you can get 50% of your money back, depending on which policy. But the most familiar term policy everyone has been exposed to is your work group term, which means you get the term insurance through your job. Okay, that's the difference. The different layers of term. Whole life, yes, we'll get into that. But to go back to your question, well, I cannot control um the prices, the rates. However, if I could help my people out and give you a hookup just for you to get life insurance, I would. But it really depends on your health. Okay, you have to be healthy. It's best that you're healthy because the healthy you are, the less it will cost. Okay, you will get the elite prices, so to speak. But it's just based off your age. So the younger you are, the sooner you get it, the less it would be. The older you get, the more time you wait and procrastinate, the more it's going to cost you in the future. But if you look at it, you're saving money while you're young and you pushing it off and waiting till you are older. That's money you could have been saving that you didn't spend, right? So I always tell people, if you're healthy, that's when you should start applying and looking for policies when you're healthy. But it's some companies that will approve you if you do have some health concerns, but of course, your rates will be a lot higher and some stipulations than someone who's healthy, of course.
That's great. That's great. So being that said, could you get both insurance at the same time? Term life for 30 years and also whole life at the same time?
Can you get it at the same time?
Yes. So you have two
Listen,
different insurance.
I'm glad you mentioned that because I was going to bring that up if you didn't. So great question. I personally always recommend, especially someone young. Oh, I didn't answer that question. So depending on your age, so for example, I would like to say people who are 50 and older, I kind of lean more on whole life. However, you can always get a combination of whole life, which is an index universal or a variable policy. But anyway, okay, let me get back on target.
No problem. You
Um,
good?
term life and whole life, I recommend the combination because once your term life runs out, your whole life is there backing you up. All right. So if you lock in both when you're young, your term premium is going to be super cheap, and your whole life, that's going to be set for the rest of your life. So once your term runs out, you have your whole life. So you have a peace of mind for life. You don't have to worry about that at all. But okay, go ahead. I'm just wait. I just get ahead of myself
You
sometimes.
can you can go ahead and explain. You can go ahead and explain.
Um, no, no, I'll wait because right now we're just talking about the basic whole life because it's different types of whole life policies, um, which means the cash value is different because you do have it's a such thing as a whole life policy with a high cash value. But once I'm assuming that's what we're gonna build up to get to because that's the policy you can use to be your own bank. in the future. So I guess we're gonna, work our way to
Yeah,
that.
definitely. Definitely.